Hi guys, welcome to A Simpler Approach. If you are new to the channel, please subscribe, like, comment, and share. Today, we will be looking at errors and how they affect accounting records. There are two types of errors. Errors that affect the trial balance and errors that do not affect the trial balance. In this week's lesson, we will look at errors that do not affect the trial balance. Let's get started. Our objectives for this lesson includes an understanding of the errors that do not affect the trial balance, and we're going to learn how to correct these errors. Let's lay the foundation, shall we? Things to know. Number one, errors. What are errors? Generally speaking, an error is a mistake, all right? In the field of accounting, errors are mistakes that lead to accounting information becoming inaccurate at some point in time during the entire process. Okay? That's number one. Number two, error of omission. Error of omission is where a transaction is completely left out of the books. It was not recorded any at all. Okay? It's two. Three, error of commission. Error of commission is where the correct amount was entered during the recording process, but the transaction itself was entered in the wrong person's account. Okay? We're laying the foundation here. We're getting an understanding of what these errors are. Okay? Cool. That's number three. Number four, the error of principle. Now, this is where the error is placed in the wrong class or wrong classification of account. Okay? Remember them now as we go along. We have error of omission, error of commission, and error of principle. Okay? Cool. That's number four. Number five, we have error of compensation or compensating errors. And this happens when you have errors that cancel out each other. Okay? Their effect cancel out each other. Okay? Number five, we have error of complete reversal of entries, or you can just call it complete reversal of entries. That is where the item that is supposed to be debited was credited, and the item that was supposed to be credited was debited. So you can see the complete reversal there. Yeah, you get the point. Last one is the error of original entry. That is where the incorrect figure was entered from the get-go. All right? Now, all these errors are errors that do not affect the trial balance. You need to know what those errors are by definition, so that when it gets to that time, you are able to correct them accordingly. Well, identify them and correct them accordingly. Okay? Good. Now that we have laid the basic foundation, we're going to lay the second layer of the foundation. And that is where we're going to get an understanding of where this error thing is coming from. What's the source of it? You know, because you need to know that. And you're going to need to know the concept itself of errors. What happens when errors take place, and subsequently or inevitably how to correct them. Okay? Okay, so second layer of the foundation. Recall double entry. Okay? Double entry is a process of recording a transaction twice. Once on the debit side of an account and once on the credit side of a corresponding account. Now, that action is supposed to provide a balance. Okay? You know the trial balance. You know what it is. Okay? Just in case you forgot, the trial balance is a list of balances, an outline that ultimately tests the accuracy of double entry. Now you should know that the trial balance should be automatically balanced. If that is not the case, it means there is an error in the process of double entry. And that ultimately outlines the purpose of the trial balance. It tests the mathematical or the double entry accuracy of your postings, of your accounts, of your balances. Okay? Now, we know that humans tend to make errors. And as a result of human error, you find that in the process of double entry, sometimes things don't go the way they are supposed to. And because of that, you find that errors are made. But in the whole scheme of things, there are two types of errors. You have errors that affect the trial balance, and you have errors that do not affect the trial balance. A few moments ago, we looked at some errors. Error of commission, error of principal, error of commission. Those errors are errors that do not affect the trial balance. What do we mean? We mean that the trial balance will be automatically balanced. 100,000 on the debit side, 100,000 on the credit side. According to the trial balance, double entry is perfect. However, these errors were made. Error of omission, error of commission. And because of these errors, they do not affect the trial balance. So it is easy to overlook them upon the conclusion that the trial balance is balanced, so everything is fine. And that's one of the major drawbacks to these errors. Because they don't affect the trial balance, they are not often spotted until time has passed. Okay? For this lesson specifically, we will be looking at the errors that do not. We won't be going into the ones that do affect it for this lesson. In our next lesson, we will. All right? So let's dive into this whole concept. We're going to look at some examples and we're going to see how we correct them. I must tell you though, that errors are corrected using the general journal. You remember what the general journal is? All right. Just in case you don't remember, let me remind you. Okay. Remember that there are 7 journals. Now, the general journal is the journal that records all other transactions that do not fit in the other 6. The general journal holds transactions such as the purchase and sale of fixed asset, writing off bad debts, the correction of errors, etc. It's that journal where you have date, details, debit, and credit. You record the debit item, indent the credit item. Starts sounding familiar now, don't it? And then you write what is called the narrative, which is a statement that summarizes the transaction. Yeah, you start remember now, don't it? Very good. Very good. So, that is where all errors are corrected. We're going to look at some examples, reason them out, reason out how to correct them, and then we are going to correct them. Okay? First example. D. Myers paid us $100 by check. The entry was placed correctly in the cash book, but was placed by mistake in D. Myers' account. Now let's break this down. We received $100 by check. Okay? What we would have done is to debit the cash book. Okay, stick a pin right there. So the second line says the entry was placed correctly in the cash book. That means that the debit entry in the cash book was done. That is fine. That is not our issue. Our issue is the credit part of the equation. Now, who paid us the check? The Myers, which means the credit entry should have been placed in the Myers account. However, it was placed by mistake in the Myrie. So what we need to do, take it from the Myrie and place it in the Myers. How do we do that? Voila. We debit the Myrie's account. Now, let's say that you are low-key asking yourself, why would I debit the Myrie's account? That's a very good question. I'm so glad you asked. Let me answer it for you. Now, if you credit an account to place an entry in there, the only way to get it out is to do the opposite, which is to debit. Likewise, if you debit an account and you need to take out what you have placed in there, you do the opposite, which is to credit. Okay? Let me say that again. If you debited an account and you wish to take it out, you do the opposite, credit. Vice versa applies. If you credit an account and you wish to take it out, you debit it, you perform the opposite. That's what you see here. So the item was placed in the Myrie's account by mistake. How do we take it out? We debit the Myrie's account. Take it out. And then what? Place it where it was supposed to go in the first place, which is in the Myers account. That's it. And remember the usual specifics. You record the item that is to be debited, then you indent the item to be credited, and then you record your narrative, which is a simple statement outlining what the transaction was. Something very, very simple. I have here check received and entered in wrong account. Error now corrected. That's it. Works perfectly fine. Okay? So that takes care of example number 1. The second example. The purchase of a motor car by check for $10,000 was correctly placed in the cash book but was recorded in the motor expenses account. Now, remember now, when it says it's correctly placed in the cash book, it means that's not where the issue is. Okay? The issue is where the other recording was placed. That leads to number 2. This is an error of principle. And the principle lies in the fact that a motor car, which is an asset, was bought but was recorded in motor expenses, which is an expense account. They are two completely different things. Therein lies the principle behind it. Okay? Now, to fix this error, we simply take it from where it was placed by mistake and then place it where it is supposed to be. And when you do that, you get this. Debit the motor car account and credit the motor expenses account. Now remember, we said that if an item was placed in an account, let's say it was debited, to take it out, you do what? You credit it. That's what we have here. Expenses are debited by nature. When an expense increases, you debit. Therefore, the item would have been debited in the motor expense account. To take it out, you simply credit the motor expense account. Okay? And after doing that, you place it where it is supposed to be, which is in the motor car. And that is why we have here debit the motor car account. That takes care of where it was supposed to be in the first place, and credit motor expense. That takes care of taking it from where it was placed by mistake. And your narrative. I have here purchase of a motor car recorded in error to the motor expenses account. Error now corrected. That works perfectly fine. To shorten all of this, you could say error of principle now corrected. That works perfectly awesomely fine as well. Okay? That's example number 2. Example number 3. Sales of $350 to G. Leslie was entered as $300. That's an error of original entry. The original figure was wrong from the get-go. Okay? So the right figure is $350 because it said sales of $350. Alright? And the incorrect amount is $300. How do you solve this? Account for the $50. That's it. And you do that in the regular process of recording a transaction like this. So sales of $350 to G. Leslie, you know that sales would automatically be credited and G. Leslie will be debited. So seeing that the recording is $50 short, you would record it again in the same fashion, but you would only record it for $50. Easy peasy, lemon squeezy. Next one. Purchases of goods by cash amounting to $8,900 was not recorded. This is an error of omission, and omission means the transaction altogether was not recorded. It was omitted. Omission, root word, omitted. To omit means to leave out. Yeah, that's a little English language right there. So, how do we fix this? Record it in the natural scheme of things. So, purchases is automatically debited. Okay? And we're talking double entry terms here. Purchases is automatically debited. So you would just debit the purchases account with $8,900 and you would credit cash with $8,900 because the transaction did say purchases of goods by cash. Okay? Easy. Ain't it? It's really, really easy, though. Yeah, I think so too. Good talk, good talk. Next one. And this is the last one if my memory serves me well. March 25, we discovered that totals from the purchases and sales day books, $10,500 and $15,700 respectively, were both overstated by $500. Now, this is a compensating error, and it's so-called compensating error because you find that the $500. Oh, let me rewind a little bit. Overstated by 500 means it has 500 too much. So the purchases account has 500 too much and the sales account has 500 too much. Okay, cool. I can come back to explain the compensating thing now. So compensating errors is when, in this case, purchases and sales both being overstated by 500 would, in Jamaican terms, squeeze out. Okay? And in squeezing out, it would cancel the effect of each other. And this is why this is one of the errors that does not affect the trial balance. Because if it was the purchases account alone that was overstated, then you would have a $500 lapse on the debit side. Okay? And if it was sales, it would be a $500 lapse on the credit side. But it's an error in both accounts. So you find that it just squeezes out. It compensates each other. Okay? How do you fix this? You simply take out the 500 out of it. So for the sales account, you know that sales is always credited. So to take $500 from the sales account, you would debit it. On the flip side, the purchases account is always debited. To take $500 from it, you credit it. Problem solved. Oh, and my narrative. Compensating errors corrected. That's it. Yes. It's easy. Yeah, really, really easy. Oh, there's one more. My memory did not serve me well. I'm getting old. Okay, so a check for $1,000 was paid to M. Johnson. The entry was recorded as debiting the cash book and crediting M. Johnson. Now, this one, it takes a little more reasoning to kind of break it down. All right, let me tell you what I mean. It is not enough to simply change around this transaction and leave it. If you do that, you would be balancing it out, squeezing it out, as it were. So it would almost be like turning it around and erasing it, so to speak. So what needs to be done is to switch it around and double the figures. When that is done, that would correct the error altogether. Turn it around and place the correct amount that should be there. Okay? And when that is done, this is what you get. You debit M. Johnson, because that should have been done in the first place. Okay? So when you debit M. Johnson, you debit M. Johnson with 1,000. So it would squeeze out the $1,000 that was written on the credit side in error. It would squeeze out that and then leave the other 1,000 for where it should have been in the first place. And the same thing applies for the cash book. You would credit the cash book. In doing that, you would squeeze out the debit entry that was placed by mistake and then leave the other 1,000 for what should have been there in the first place. Okay? That's the little trick to this error. Okay? And my narrative, error of complete reversal of entries, now corrected. Simple. Done. That's the concept behind errors that do not affect the trial balance. I hope my explanation was straightforward, to the point, precise, and concise. Okay? Allow me to remind you of a few things before we go. One, you were reminded before, I believe, in terms of double entry and the fact that double entry is a topic that intertwines with a whole lot of topics in accounts. And as you can see, double entry is embedded in errors. Because when we get to errors that affect the trial balance, we're going to still have some double entry to do. So the basic concept of double entry is a foundational topic, and it rests throughout most topics in accounting. Okay? So ensure that you brush up on your double entry. And as you can see also, we did go back to the general journal. Yes. So please ensure that you are practicing so that as the topics progress, you'll be able to progress along and travel along with the topics as we go forward. Okay? If you enjoyed that one, please feel free to subscribe, like, comment, and share. And as usual, if you have any questions, concerns, queries, irrespective of whether those questions, concerns, queries pertains to this video or a previous one, doesn't matter. If it's even a random question, doesn't matter. Let me know in the comments section and I will respond to you directly. Until next time, walk good, stay safe.